recording is live. Let's get the event live. 2 seconds. All right, we're live. Let me put the link in the chat for everybody. All right. Nope, that's the wrong tag. It's hard when people have a username that matches one of our roles. Okay, let me go ahead and... Okay, there we go. What's up, Onrod? How's it going? Happy Friday, sir. It's another Friday. I like it. We'll just give everyone a couple minutes to roll in. We always try to give them maybe a 3-4 minute window. It is also Friday, so I don't expect everyone to be focused and in the Discord today, so we'll see what we get. It is a gorgeous day out. Here we have a nice weekend ahead of us. It's just going to be hot and humid, but kind of expect everyone to be a little bit more human towards the end of this week. What's up, Doctor? How's it going? How many more rooms do you have for that flooring? By the way. Just going to give everyone a couple minutes here. One more working in the hallway. Okay. Is that your home or is that a new building for practice? The floor makes me think practice. Oh, friend's home. Okay. Oh, right. Duh. We talked. I meant for medical practice. I assume that kind of flooring would probably be good for little claws and paws. A lot of light in there. Good stuff, though. Good stuff. Remember, lift with your back. Don't breathe. Your body produces its own oxygen under strain, and twist as violent as you can, so you get more torque and you can move things easier. That's what Duco told me. You got this. Duco's sad. Why is Duco sad? What's going on, Duco? Because you got to work. Is it super hot where you're at right now too? Or is your truck just giving you a problem? Or is it market stuff? Or are you sad because it's Friday? We'll get rock and roll in here in a little bit. Just want to make sure everyone had time to get in here. Let me just check my DM real fast. Nikki, I can't do this at the moment, but do you want to send Boris a direct invite instead of the WAP link in that DM? Ideally to the support channel. Do you know how to do that? If you don't, it's okay. I can do it after. I just don't want to do too much while I'm streaming. Okay, no worries. I'll get you that link. Where did it go? Sorry guys, just one moment here. I'm just trying to make sure that we have something specific here. Okay. Sorry guys, just one moment here. I'm sure you can hear the typing. If you can't, I apologize, but the people in the recording more than likely can. Alright, sorry about that. Okay, let's take a look here. Just bad news overnight. Local mother, very bad postpartum. Oh, damn. That's a pretty intense moment, man. Just hits home. Wife's very suicidal. That's understandable, man. I mean, that's going to bring a lot of stuff up for sure. We obviously not trying to compare stories here, but we actually just had a family nearby. They also exited. And CPS was called like 10 times. It's a whole thing. And it was avoidable. But yeah, they just didn't get the help they needed. And that's rough. Very, very real. We don't look at mental health until it's a reactive situation, and at that point, it's very, very difficult. So sorry you're carrying that around, but I get it, man. Especially if it's something you personally relate to, Yep, absolutely. Just snuffing out innocence is never. It's never a good thing to have in the world. That's rough, but the best you can do is process it, to the best of your ability. So feel what you feel. That's what I'm saying, It's there, it's real, you're perceiving it, you're processing. There's always that pressure to like not feel stuff or not show stuff, but you're a human, so live your life, man. All right, and obviously my DM is open too. If you ever want to just vent or something like that, I get it. I promise I can be less lectury in DMs once in a while. But let's go ahead and get moving forward on this. Yeah, Snowflake will not accept DMs. He hates you. He took out a restraining order. He's a monster like that. All right, yeah, let's get rock and rolling. So today I want to talk about position size in series. So when we're trading, right, this isn't going to be like a speculative stream, but I do want to talk about position sizing as a strategy, since we talked about the scaling and the ratios of our investments. Specifically, we talked about dividend versus growth income in our dividend position. So just as a really quick recap, I'm going to give everyone the high-level view of what dividends are and kind of how they work and the pros and cons. Okay? So those of you who have been on the stream a lot, you guys know exactly what's coming. Those of you who have not, take notes. Just kidding, it's recorded. So when you buy a dividend share, you are buying a full share, okay? And as such, one of the rights of owning that share is that you're entitled to this piece right here, which is a dividend, okay? A dividend is just a monetary, in most cases, a monetary payout that a company provides to shareholders when certain conditions are met. So in this case, the most basic case is that you just have to be a shareholder of record, which is a person who's in their books as someone who owns a share on or before a certain date. And then if you hold it through that date, you receive the cash payout at a later time. So that process looks like this. So you got two basic segments here. You've got the share component, which is what you buy at market value. And then you've got the right to the dividend, which is also part of that share value. So it's reflected. Let's say a share is $10 per share. You buy one. Okay. This might be $9.50. This might be 50 cents, right? They both add up to make that $10 value that you bought when you bought the share. So instead, what you're doing is you're keeping this share in your portfolio. Your broker holds onto that for you. That share is then adjusted because this piece is removed from it, and it's converted later on into a cash payment that sits in your cash bucket. So you keep the share, you get the cash payout later, but you're not really gaining any value. Okay, and this is where dividends are usually the most misunderstood. The value from holding onto a dividend stock comes from the share regrowing what it was adjusted down from, or down by, sorry. So you get the 50 cents in this case, you trigger a taxable event on it, right? Because that is you getting paid. It's a capital gain, which means you're owing on that. And then if the stock can't recover by that amount, the share, the next time that dividend process comes by, like whether 3 months or so, you will have a positive or negative value on the share itself. Okay, so if the stock goes up $1, but by the time the next dividend comes out, and the share price is $10.50, and then it gets adjusted by another 50 cents, your share will then be at the $10, right? But it's made up for it by at least $1 to get from $9.50 up to $10.50, and then it was adjusted again. So it's just a series of these growing and trimming processes that get lumped over into cash. But again, if the share doesn't recover by that amount, then the shares will lose value. And when they lose value, we can use those to sell, okay, to offset the tax burden on the dividend payments that we're receiving. Does that make sense to everybody? If it does, just put a 1 in the chat just so I know. If there's confusion about that, put a 2 in the chat. I know you guys are all here a lot, so I just want to make sure that everyone understands this, because this is like the root of it all when it comes to building dividend positions. So you've got this cash, right? It sits in a bucket. You use that to buy more shares, and then ideally the shares grow back what they were trimmed. It's like pruning a tree, basically. You trim off pieces of it, the tree keeps growing, right? Now, a company doesn't have to, but if they don't trim dividends and it's a very good, strong company, the shares will just keep growing faster and faster, and it may be out of reach for a broader audience that they may want to target. That's why they offer dividends, so that it keeps the shares appealing for a broader audience of investors. So we've got a couple different events here, right? We got the initial purchase, okay? Then we've got the ex-div adjustment, okay? And then we've got the taxable event, okay? And then we've got the regrowth or the result of the shares, the equity result, okay? And then this will be, again, plus or minus in your holdings. And you will have cash that you have to pay taxes on, so you have to offset that with losses somewhere else if you don't want to pay those taxes. Now, and the idea here is that if we can harvest a bunch of this cash and use the cash to buy more shares and also avoid paying taxes on that cash, then we have a self-running machine where we can just accumulate more and more shares over time without paying for it, right? We don't want to pay taxes. We don't want to just funnel money between one form to another. We want to use that transformation process to increase value and then use that buying power to amass more shares, okay? That's the magical part of this. So if you're just buying a bunch of dividends and you're just getting a bunch of cash and you're just paying taxes on it and you're just buying new shares, you're not really doing anything efficiently, because you're basically money laundering to yourself at the end of the day. So there's a little bit more depth and a little bit more strategy that we want to incorporate, and that's why this selling for losses is important. Because if let's say you're day trading, for example, and you take losses, you can sell those losses and you can use that to offset the taxes. But this number here, this cumulative dividend payment, assuming that's your only capital gain, tells you exactly how much you need to lose in order to break even on those dollars, and those dollars are still used to reinvest for new shares. So the beauty in this is that you get the free shares without paying taxes, but you have to do it a certain way, okay? Now, with that in mind, the main goal here is just to get as many shares as you possibly can, quality shares, of growth positions into a larger portfolio, and then you can use that for collateralized debt, live on the debt because it's tax-free, and then you're no longer in the rat race of paying taxes and working hard, okay? So that's the goal for the investment side. That's how dividends work. That's the process. So now let's come over to the speculative side, and I'm going to talk about a self-limiting process, because earlier in the week I kind of touched on this with a few people, and in Lifetime I shared a video for you guys about the difference between structure and discipline, because there's still, no matter how long you've been in the market or no matter how long you've been around other traders, we've been diving very, very hard into what confirmation looks like in terms of market structure, mechanics, and volume. We have to do the same thing with our brain, because if you just say something vague like look for confirmation before entering, everyone's going to have their own idea of what confirmation looks like, and that leads to confusion. So when it comes to discipline and people just say, oh, work on your discipline, build your discipline, develop your discipline, it's just as vague, right? People are going to try to fill in that gap with whatever they believe. And for most people, they're going to think that's willpower, okay? Willpower is not enough. It doesn't matter how badly you want something. That doesn't mean you're actually going to be able to do it, okay? Look at anyone who's in like substance abuse recovery. Nobody wants to be in that situation. Nobody wants to have a terminal illness. Nobody wants to be financially disparate. You are the subject of your own circumstances at all times, and that means external forces and internal forces. So external forces may simply be lack of opportunity, lack of support, lack of specific resources like chemicals or things like that. Internal forces are things that you're made up of. All your willpower, all your logic, all your reasoning, the physical components in your brain, the neurotransmitters. You may have an impacted ability to uptake certain things. For example, you may have hormonal disruptions. Like everything is unique to you when it comes to how your brain operates and how you rationalize things and how you're able to use those rationalizations. Like who here knows when they're doing something wrong? Just if you do, put a 1 in the chat, 2 if you don't. I'll tell you right now, anyone who puts a 1 in the chat and believes that's true every time they do something wrong, you are not being truthful with yourself. Anyone who puts a 2 in the chat, you are also not being truthful to yourself if you're taking it as a blanket statement. The reason for that is because we don't know what wrong is all the time. Right? You can know when you walk into someone else's house what you should or shouldn't say or do while you're there, right? There's that social pressure of, minding your manners, being considerate, don't destroying people's property because that's also a crime. It's criminal mischief, things like that, right? But there's a lot of gray area, a lot of nuance, a lot of cultural differences, a lot of just stuff, right? So there's the hard no, like don't kill them, don't sleep with their wife, exactly. And then there's the more nuanced stuff like, don't blow your nose in an empty room, don't don't toot outside their bedroom window, just little stuff like that. Don't look at their calendar on their wall, just little things like that are a little more nuanced. There's a lot of philosophers that kind of try to define where that line is of, the absolutes that span across cultures and time. And then there's the more nuanced stuff. Don't worry about it. And then there's the more nuanced stuff, which may or may not be worthy of, being punished over, right? So there's a constant balance of right versus wrong that happens in our brain. And we do our best as humans, based on the information and abilities that we have, to try to analyze stuff as consistently as we can. And a lot of times we just get it wrong, and that's okay. It's very hard to see other people's perspectives, especially if ours is skewed. And we do that a lot to ourselves in the market. We say, this is who I want to be. This is what I want to do. This is the way I want to behave. And I convince myself very, very effectively that next time I will be better. Going forward, I can do the right thing. This is forgiven. This is forgotten. We're going to fresh start starting tomorrow, right? We're going to do this just tomorrow. Trash goes out tomorrow. We're always putting it off. We're always pushing it forward. We're always committing to something that we don't have the obligation of actually following through on. And that's where discipline becomes dangerous, because we're making a commitment and it's attached to our identity. And when we fail to do that, we are aware of it and we punish ourselves. Okay? We don't focus on the reason we weren't able to do it, and we don't accept that it's the net sum of all forces in the universe kind of putting us there, right? Not to boil everything down to causal determinism, but at the end of the day, we simply didn't do it, right? It doesn't matter why or how we got there. It just means we didn't do it, and we said we were going to, right? So there's a cause and effect there that doesn't align with our expectation that we committed to, and that is a stressful state for a brain to be in. So you got to consider all the forces that were in favor of you doing this, and all the forces that were opposed to you doing this were weighed. They were all hashed out. They were mashed through this big array of yeses and nos, plus and minus, and it ultimately led to the outcome that you see in reality. And when that reality doesn't meet your expectation, that provides uncertainty, that provides irresolution, I guess. And then you get stressed out because you're trying to live in a universe you expected to live in. You're trying to make that end result still come true, even though you can't, because reality already happened and you can't undo it. So discipline is a faulty process at the end of the day, because we typically just weaponize it towards ourselves. We hurt our feelings, we blame ourselves, we convince ourselves we did something bad. In reality, we didn't do something bad. You can still hold yourself accountable, but you didn't deliberately do something evil. You're not a piece of crap. You're not a bad, stupid, ugly, I said stupid again. You're not just a really bad trader who can never figure this out. The fact is, you're just incapable at that point in time. If you freeze a hamburger, okay, in time as a microstate, and you look at all the way that all the molecules are arranged in that hamburger, you realize that it has a specific temperature at all these different points. You realize it has a specific composition, a specific rate of decay across all these little micro components that make it up. But ultimately, as a whole, you recognize it as a hamburger. And then you give it 5 seconds, right? And then you freeze it again in a different micro state. That's a completely different hamburger, right? Because all those little variables have changed. They've shifted just the slightest amount, and that is a different hamburger, okay? So from state to state, second to second, minute to minute, you are a different person every single time that you freeze yourself in that little micro state and analyze yourself. So if you give that same burger a week and you look at it a week from now, it's going to be disgusting, right? Completely different hamburger. There's no argument there. People would recognize that the state of that burger has changed over the course of a week, right? It's going to be colder. It's going to be staler. It's going to be probably furry if it's got like fungus growing on it. Depends on where you get it. It's not going to be safe to eat. It's a different state that burger is in. The molecules have broken down, right? It's not going to nourish you the same as that one fresh burger would have. And at the end of the day, that's not the burger's fault. It's just the way that the process happens, right? So as a human, you're the same way, right? And I talk about this a lot in the neuropsych stuff. At the end of the day, you've got this some result of forces, okay, that drive every decision, action, feeling, sensation you have. And the end result is the end result, no matter how you feel about it. Like if you decide to pick your nose, whether or not you pick your nose is separate from that decision to pick your nose, okay? You can want to pick your nose as bad as you want. You can have a plan for what you're doing after you pick your nose. But if you're not shoving your finger in your nose, all that stuff doesn't really matter at the end of the day. It's just knowledge. It's information that you have. It's an internal experience that was unable to sway your decision to pick your nose, okay? Now, in trading, we run into the same problem in that we don't view the decision-making separately and independently from the actual action, okay? And this is where we hurt ourselves. Structure can help you mitigate that. It's not going to help you prevent it, but structure is different from discipline in that it doesn't care how you feel. And you see this a lot with like trauma situations, for example. People who have been subjected to trauma oftentimes fall into one of two buckets. They either hesitate the next time that they're in that state, or they problem solve with impulse the next time they're in that state. So there's a capability for people who are kind of in that middle ground also to kind of compartmentalize their emotions and do what needs to be done. And then there's people that are just completely driven by their emotions in that state, and the decisions just happen, right? Either way, impulse finds its way out, and then there's the aftermath of how we felt about the experience, right? So in the market, we do the same thing. So let's say, I'll use this one here. I'll use this one. Let's say here's the chart, okay? You get in here, price does one of these, right? And then you don't know what's going to happen after that, right? So this whole area here is uncertainty, okay? This is stress. Stress. Okay? Because we're relying on discipline, we're relying on a future that we can't predict, we don't know what we should be doing here. And it's very stressful. It's an anxious state that we keep ourselves in. And the longer time passes, the more stressful we are, the lower our capacity to tolerate that uncertainty becomes, right? So if you've ever been in a stressed out state and you got mosquitoes flying around, maybe a fly lands on your face, someone keeps asking you, they keep calling your name, they keep pulling your focus away, maybe there's a loud sound, or maybe it's uncomfortable, maybe it's like cold, or maybe it's too hot, maybe your clothes are uncomfortable, maybe your posture is messed up, you're just very agitated. And then there's that one little thing that just sets it off, right? The straw that breaks the camel's back. That's what we do in the market to ourselves constantly. So rather than relying on willpower and saying we're going to push a button when the price is here and we're going to push a button when the price is here, which is just pattern recognition. We do that all the time without nearly as much stress outside the market. This is incredibly difficult to do. If your goal is to just push a button when some pattern overlaps another pattern, and you can do that everywhere outside the market, but in the market for some reason you just can't push the damn button, it's not the pattern, okay? It's you. It's those internal forces. It's the external forces. It's the net sum and the weighing of those that result in this process of how you resolve stress. So until you recognize that it's not something to blame yourself for, but instead something to embrace, you're going to run into that wall. It's going to be a pattern. You're just going to keep doing it. It's going to suck. It's like New Year's resolutions, right? Humans are dumb. We pick the worst possible time of the year to choose to go on a diet, and that's our bodies are literally designed to pack on weight during the winter, and we're like, oh, we're going to start losing weight. We're going to get our summer bod ready, right? And then what do? We go to the gym, we sign up for a month, we go for a week, and then we stop, right? It's the same thing in the market. You tell yourself you're going to be better. You're going to be more disciplined. You're going to push the buttons. You're going to follow this strategy. You're going to follow this plan. You're going to start to collect data. Where's the data? Where is it? Do you have the data that you promised yourself you were going to collect? Do you have meaningful insights from that data because you were able to slow down and focus on what happens inside of you when you push those buttons or when you see those patterns? Or are you just focused on the P&L? Like most traders, they just focus on making profits. Hell, half the traders out there, or 90% of the traders, don't even plan for the downside, right? Those that do have an incredible edge, but then if you're still not getting data about how you respond to visual stimulus and your feelings, because you think it's all, pointless and you're not making money by thinking and feeling, you're going to have a hard time. So while you're figuring that out and while you're developing this quote-unquote discipline, you need to have structure in place to protect you. So instead of having this chart, which may or may not go up or down, you don't know where it's going to go, right? At any point in time, it could go up or down from here, up, down, or sideways from there, from there, from there, from there, from there. You need to have a plan. You need to have something mechanical in place that says, okay, I have rules that I want to follow, and I want to follow them. I want to follow them very badly, but I need to find a way to put something in place when I'm unable to follow those rules, okay? And one of the easiest and dumbest ways, no offense, is the best possible way, is just to use like bracket orders. Use a stop loss. You'll have a much better time in the market if your losses aren't double digits, if you're not 60% down and fighting with yourself about whether or not something may or may not come back up. If you see a big move up, there's nothing wrong with taking that. It doesn't matter if it's on the weekly time frame, the daily time frame, the 2-minute time frame. It doesn't matter. If you've got a move from here to here and you're content with that, you can lock it up. There's nothing wrong with that. If you're entering a swing trade and you see a move like this and you plan to hold it for 4 months instead, there's nothing wrong with just taking that risk right off the table. Okay? You can abandon your expectation of profit and cadence if you see a move that is in alignment with your tolerance. Okay? If you tell yourself you're going to hold a trade for 4 months and it must go here before you can do anything, and it stays here for 2 months and comes back down here and starts to sell off and it hits your stop loss, guess what that does to a trader? Guess what this part right here does to a trader? You're dealing with this. It's uncertainty. You're in a stressful state. You're going to stay in a stressful state for 2 months because you told yourself that you were going to get this profit and you were going to push this button and you wanted to do better and this is what doing better looks like and blah, 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 right? This is completely different from just selling early, right? You have a bird in the hand profit and you were comfortable with the trade up until that point. And the point where this becomes problematic is when you start to escalate your emotions about a pattern, right? So I'm going to buck the grain here, and I'm going to tell you guys there's no such thing as selling early. If you like this setup and you see the price start to do this and you choose to get in here and the price goes up here and starts to do this and you want to get out right here, you have my blessing. I can't legally tell you what to do, but you have my blessing. Because if seeing the price go like this is going to put you in a state where you're unable to make rational decisions and follow your plan and you're stressed out and it's beyond the ability to tolerate that and make clean executions, you can always get the hell out. If this right here causes you to stress out, you can get the hell out because it just means you're not ready to stay in it for this part. And that's okay because this part is not a guarantee. This right here is the guarantee. You have that. You can lock it in. You can move on to the next trade. You can abandon it. Okay? Maybe you go on a date with someone. Maybe you have a great time at dinner. Maybe you go watch a movie, go for a walk, whatever. You have a great time, and then stuff just starts getting weird. You can just cut bait. You had a good time. You both had a good time, assumedly. You could just walk away. There's plenty of other dates to go on, right? And if you tell yourself you're going to stay on that date, you're going to go to their house, you're going to do stuff, and they're not on board with that, or you don't feel good about what's going on, you get in a lot of trouble, right? Or you just have a miserable time. You both do. So in this case, it's okay to cut bait and run. Like, you don't have to sit there and see this through if you're not comfortable or using the little amount of discomfort to expand your tolerance. Okay? So that is where we explore the boundary of our discipline. All right? We have to push ourselves near our limit, not over the limit. Okay? You want to experience what that limit feels like, and you want to understand the specific thoughts, the specific feelings, and the driving forces that lead to decisions while you're approaching that limit. But once you cross the limit, it's over. You've gone too far. And if you're still in a trade and you're convincing yourself that you need to stay in it and see it through, and you have these insisting thoughts, the trade itself isn't the issue at this point. It's your insistence, and it's you're just beating yourself up. You're inflicting more harm by staying in that trade. And again, I know I'm kind of bucking the trend here because everyone says, oh, you got to follow their trades all the way through. That's not always the case. Okay? In a lot of cases, it's destructive to stay in something that is stressing you out and makes you uncomfortable. If it's used properly and you're using it to explore your discomfort and the way that you respond to that discomfort, that is a healthy thing. If you are inflicting damage on yourself by trying to force a trade and seeing it all the way through, regardless of the end result, you are harming yourself. So you have my blessing. Take those profits early if they're there. Take a loss early if it's there. It's not just the candle chart that you have to monitor, right? You also have, behind the scenes here, you also have an emotional chart. And wherever this is, you need a level where you know it's time to just say, all right, you know what? This is a little bit too much. I'm tilting a little bit. I'm not comfortable with this. I'm just going to take some risk off the table or exit completely, walk away, and move on to the next opportunity. I guarantee you that's not the only opportunity you're going to find. Okay? So that's discipline. Discipline only gets you so far. It is a muscle that has to be exercised. It is a skill that you have to build. And in the meantime, we have structure. Okay? And again, structure does not care how you feel. Structure is things like a daily lockout, for example. So if you hit your goal for the day, or if you hit your loss limit for the day, you simply close the broker and you move on. You tell someone else that you hit your limit and you move on. And then if you find yourself opening the broker back up again, make sure it's cumbersome so that you have to do things in order to get back into that state where you're looking at a chart again. That is where you need to catch yourself. And that is where structure comes into play. Being able to log out of your account, close the app, log out of Windows, do whatever you got to do. Turn your computer off if you can, walk away. Those are forms of structure. It may take some discipline to get that in place, and that is a form where we can always kind of compromise on everything because we're humans and we're very good at that. But holding yourself accountable means also logging along the way. That's part of structure. You need to make sure that you're checking boxes as you go so that you're acknowledging at every step. You are making a deliberate effort to put yourself back in the situation. Okay? And then once you're in, if you're looking at charts, say that you didn't lock yourself out for the day. Let's say this is the first trade of the day. What is your position sizing going to be? Do you have a plan for that? Did you type it up ahead of time? And are you able to put it into your broker before you push the button? Or are you just going to throw stuff at the wall and see what sticks? Because I can tell you right now, it doesn't work. So let's look at some examples. If, for example, let's say I'm using a small account here, for example. Let me use a 90% buy, right? 90% buy for my first trade. Okay. One of three things happens. It either goes up, it goes sideways more or less. Maybe I take a small loss, or it goes down. Ideally, I don't take a huge loss, but sometimes that happens too, right? Let's say I'm on $1,000. Okay. And let's say we make a let's just do a 3%, 2% situation. So let's just say I got 3% profit, 2% loss. These are going to be pretty small. Actually, let me exaggerate these numbers just so we can more clearly see the impact here. Let's do 10% and 5%. Let's do 10%. Let's do 10% both ways. Okay, and obviously this would just be a break even or maybe a small variance here, so we're going to kind of ignore that. Now, if I use 90% of $100 and I get it up 10%, that's going to be 90 bucks. So let me pull up the calculator here. So 900 plus 10%, just so everyone knows. I'm being transparent here with the math. It's $990. Okay. 990. Okay. And then over here, if I start with 90% of $1,000, so $900, and I lose 10%, 900 minus 10%, there we go. That's going to be 810, right? And again, these numbers are pretty exaggerated, so obviously we wouldn't want to take big losses like that, okay? Now, if I were to take the next trade, okay, I would use a 50% position or something smaller, right? 50%. All right, 50%. Not as a profit or loss, but as a position size. Okay. Now, in this, well, let me do this one as well. 50% of the 900 that we would have started with. Now, three things can happen here, right? We can go up, we can go sideways, or we can go down, right? Sideways, up, or down. Up, sideways, or down. So this is one trade. This would be two trades, effectively, right? So let's break up the math. And we're just going to assume, again, 10%. So 990 divided by 2, okay, 50%, plus 10%. It's going to be 544.50. Oh, plus the other, let me just, plus 49.50, sorry. Plus 49, actually, no, I'm going to add the 49.50 to 990. Sorry, we'll just, I want the total portfolio value for this. It's going to be 1039.50. Okay. Or, again, if it goes flat, 990. You know what? I gotta add the, I'm not being consistent with my results here, so sorry guys. My brain is not doing what I wanted it to do. Because I'm choosing to use the full dollar amount, and then I'm also just choosing the position size here. So say I start with $1,000, right? Trade one. Okay, let's use the full 100%. Okay, equals $1,000 position size plus 10% for a win equals $1,100. Minus 10 for a loss equals, it's gonna be 900. $900, and then of course flat is flat. 0% equals 1,000. All right. So now, trade two I said. Trade 2A is going to be the 1,100 scenario. Trade 2B is going to be the $1,000 scenario, and then trade 2C, depending on what we had as a result, it's going to be the $900 one. Okay. So now we're going to use an $1,100 position. Let's say we won the first one. Now we have the plus 10%, we have the 0%, and we've got the minus 10%. But we're only going to use half of our amount for this trade, for each of these. Because we're two trades in now. We don't want to risk the full 100% again, because if we get 10% up and then 10% down, we're net negative, right? Because we've lost 10% of a bigger number. So we want to use a smaller number for the subsequent trade. So in this case, if we start with 1,100, we add, we're going to use half of that, divided by 2, plus 10% is going to be 605 plus the original 550. We're going to be up to 1,155. And if we go flat, we're 1,100. And then, of course, if we lose 10%, that's going to be 550 minus 10% plus 550 to round out the position. We're 1,045. Okay? So in this scenario, because we won the first trade, or won at least one of our trades, and then used a smaller position size, even though we just lost the same amount, on a smaller position, we're still net positive for the day by 4.5%. So we can walk away as soon as we hit that loss and just be up 4.5%. Okay. Now, if we went break even, okay, for the first trade, in the second trade, we're going to use half the position. Let's say that we, $1,000 plus 10%. That's going to be 1,100. That's going to be 1,000. And of course, that's just going to be 900 again because it's the same outcome. But the difference here is we got to cut these in half. So this instead is 1050, and this is 950. Okay, because we're only using half the portfolio, not 10%. So it'd be like a 5% plus or minus against the full position. Okay, 0 is going to be 900, obviously. So let's do 450 plus 10% plus 450. That's going to put us back up to 945. And then for this one here, 900, 450 minus 10% plus 450 is going to be 855. Okay. So I know it's a lot of math, and I'm sorry about all the numbers and the fact that I didn't have this all written out ahead of time. But hopefully this makes sense, right? So if we start with $1,000 and we get one set of the three possible outcomes, either plus or minus or flat, we'll have three starting numbers for trade number 2. Okay? But we're going to use smaller position sizes for each of those possible outcomes here. And if we win our second trade in a row, we're up 1155, so 15.5% for the day. If we break even on the second trade, we're 1100 for the day, so we're up 10%. If we lose the second trade, we're up 4.5%, so 45 bucks, right? The break even just basically cuts the initial profit in half because we're using half the position size. So I hope that part makes sense. I don't want to go through all the math again. And then if we lose the first trade, if we just want to walk away for the day, we can, right? But if we want to keep trading, worst case scenario is that we take 2 trades in a row, we take 10% losses on both trades, but because we're using smaller position sizes, we're only down to 855 instead of 1,000 minus 10% minus 10% instead of 810. So we're saving $45 by just reducing our position size and using half because we already took a hit, right? We're not multiplying that initial outcome either direction, right? So now we can, I'm not going to do it here on the stream, but we can understand that if we then use a quarter of the portfolio, this number will get bigger. This number will get bigger. This number will get smaller, right? It'll still be positive, but it'll still be smaller. Same with this one and this one. And same with this one and this one. So instead of going all the way down to like 70%, maybe we're hanging around, I guess let's figure out worst case scenario here. It's 1,000 minus 10% minus 10% minus 10%. So this would be 729 if we just use 10% at flat 10%, right? And then instead, if we use 900 divided by 4 minus 10% plus, what is 900 divided by 4? 150. That didn't make any sense. 900 divided by 4, 225 times 3 would be 675. Okay. So minus 10% plus 675. So we'd be at 877. No, that doesn't make any sense. Oh, yeah, it would. No, because I got to, okay, my bad. I got to do it off 855. My bad, guys. My bad. Oh, man. 213.75 times 4 equals 855. Okay. Sorry, I'm saying if we lose the first trade, then lose the second trade, and then reduce the third trade to a quarter of the amount, what would that be? So 213.75 minus 10% is, that'd be 21,375. Okay. And what do we say? This would be 192.38 basically. Okay, 213.75 times 3. So sorry again, I got about the math, guys. 833.63. Okay. So 833.63. Okay. So again, sorry again about all the numbers. I know it's boring, but I want to demonstrate here that if we take our position size and the first trade we use 100%, second trade or series of possible outcomes here, we use half of that, and then the third trade we use half of that. Instead of being down $280 or $271, we're only down 174 or 176.37. Sorry, I was trying to subtract that in my brain on the spot. So we're saving almost $100 in the worst case scenario after we take 3 consecutive losses. And at that point, I probably wouldn't be trading too much if you took 3 10% losses in a row. Maybe it's just not a good day, right? So again, the goal here is that by reducing position sizes for subsequent trades, you can give yourself a defined number of outcomes for all the number of trades that you take. So I can literally plot this out, and I might do it on a spreadsheet just so it's visual. But if we start with some number, and then we have some scaling size, meaning we reduce by some number or some percentage for each subsequent trade, then you are going to reach a number where eventually the reduction is 0, and then the value is the minimum surviving value, which is the max loss scenario. And that will be larger than just taking flat losses on the full amount over and over and over again. Just like with the profits, the numbers will also cap out, right? So this is effectively like a spread on position sizes, where you're just going to get diminishing returns to the upside, which is fine because you're still getting a % ROI on dollars, but you're risking fewer and fewer dollars and locking in the wins that you get earlier on in the chain without sacrificing too much money if you get losses earlier in the chain. Does that make sense to everybody? I know it's kind of, it's a lot of math, but basically, let's say you gain 10%, then lose 10%, you're net negative. Does everybody understand that? Because that's how math works. 1,000 plus 10% brings you up to 1,100. Then you lose 10% of 1,100 instead of 1,000, so you go down by 10% or $10. Most traders think you just break even, but you're not, and that's why percentages are dangerous. So what we're doing here is we're taking advantage of that concept, but we're flipping it upside down. Okay, we're using inverse position sizing based on the series of trades we take. Assuming again that we have fixed outcomes here, you guys can see that this number is pretty nice. Now, let's say instead of doing 10% up, 10% down, let's do 5% up, 2% down, right? Or 2.5%. I'll just use 2 because it's a little easier, right? Let me get rid of these numbers here. It's pretty safe probably to also neglect the 0%, the break even, but we'll do it anyway. All right, 1,000 plus 5% is obviously 1,050, but we'll do it just for the sake of the math. 1,050, 1,000, and then of course minus 2%, it's going to be 980, right? Winning scenario, so one win so far would be 1,050 starting amount plus 5%, 0%, minus 2%, equals 1050 divided by 2, right? Because we want to use half of the amount, which is 525, plus 5% on that, plus the other actual 525 to flesh out the position, brings you to 1076.25. 1050 plus 0% is 0% on half of it. 1050 divided by 2 is going to be 525 minus 2%, plus the other 525 to round out the position, brings you to 1039.50. Okay. Now, if we look at the loss scenario, and we start with 980, okay. Let me just do this real quick. Again, I'm not trying to bombard you guys with numbers here. I know it's boring as hell, but I want you guys to see the message behind the message here, in that position sizing is much more important than any individual trade's outcome. And the more control you have over the size and distance of your risk exposure, the better your outcomes will be as a trader. Okay, so 980 divided by 2, right, because we're using half of it, plus 5%, plus the 490 to round out the position, brings us to 1004.5. And that, of course, is 980. 980 divided by 2 minus 2% plus 490 is 970, 970.20. So in this case, you would have taken 2 losses. In this case, you would have taken a win, then a loss, then a win. In this, I'm going to get rid of the zeros here because it just doesn't make sense. I'm not going through all these scenarios. This would be win-win. This would be win-loss. Does that make sense to everybody? So depending on how many trades you take and how you break them down, you will have a finite number of outcomes that you can expect at the end of every series of trades. Now you're going to have a little bit of slippage, a little bit of variance, but the general ranges, especially if you can use brackets and things like that and put that structure in place like we talked about, this will be very, very consistent. And you can see 3 out of these 4 outcomes result in a net positive end result, even if you take your first loss. Does that make sense to everybody? And this applies to swings. It applies to special dividend positions if you just want to lock in that future dividend. It applies to day trades, obviously, options trades, whatever you're trading. It's all about your position size and the ratio which you apply to them over a series. And the argument can also be made, why not increase the position size? So let's start with $50 for the first trade, right? 50 plus 10% is 55. 50 minus 10% is 45. Now let's double it. Let's do 100. Okay. Plus 10% is 110. 100 minus 10% is 90. Okay. So what happens if I start with, let's say I start with $200 in the account, or the allocation, right? I use 50 of that, and I get my first win, and I bring home $5 plus 5. So I now have $205. Okay. Now what happens if I take a loss? Equals minus 5, right? So now I'm down to 195. Okay. Now if I'm taking, I got to refactor these numbers here. If I took 100 of that the 205, for example, and I bring home $10. Okay, so 2 wins, 1 WW equals, it would be plus 5 for the 205, and then the plus 10 off the 100 that we're using. That's plus 15, so I would now be 215. And if I took a loss, it would be plus 5 for the first trade, minus 10 for the second trade. So I'd be at 205, or 195, right? And then if I take a loss and then a win, okay, on that first trade, I would lose 5, gain 10, okay? And that puts me, of course, in the same position there. I'm $5 up, okay? And then if I take 2 losses, it would be minus 5, minus 10, which puts me down to 185, right? So even in this case, I still have 3 of the 4 scenarios. Now I'm not scaling the percentage based on the position size. I'm just using smaller allocations within a $200 range. But in this case, I still have 3 of the 4 scenarios, which leave me with a net positive end result. And as soon as I start taking 2 trades in a row, I can stop trading for the day, and I know exactly what the max loss is, or the week, or the month, or whatever it is. The idea here is that if we're building our discipline, like I talked about, we need to have less uncertainty in the mix. Okay? So if you're able to place your buys, and your sells are automatically placed with those buys, and you can close the broker and walk away, you will have a much better time in the market emotionally than most traders, because you're not going to escalate, right? It might be agonizing to close the broker down and not know what's going to happen. It might be agonizing to wonder all day, but you're not acting on those emotions because you put structure in place by closing the freaking broker. You have exit orders in place in both directions. You are set. You don't need to take any more action than that. Now you can spend the rest of the day focusing on why you're freaking out about not knowing something. We don't freak out about not knowing the future anywhere else in life for the most part, especially when things don't really affect us. Like, I don't know what Duco's favorite food is. I don't know what he's going to eat 2 weeks from now for dinner. I have no idea. It doesn't bother me. I have no emotions about that. He has no emotions about that. I don't know what he has on his computer screen right now. It doesn't bother me. I'm completely detached from caring about what Duco's looking at on his phone or computer screen right now. It's a piece of information I don't have, and there's no emotion attached to that. So we have to then ask ourselves, why the hell do we care? Where does that stress come from? Why does one thing matter and another thing not matter to that degree? to where we have an adrenal response. Why do I start sweating? Why am I physically agitated? Why am I stressed out and fidgety, or, breathing different, or, like, why am I lashing out at loved ones, or why am I constantly distracted by wanting to look at a chart and see one pattern overlay another pattern? Like, what's the deal with that? It's an abnormal behavior until you really break down the science behind it and understand that your brain's just trying to resolve uncertainty. And that uncertainty only needs to be resolved because it's attached to your identity. And that identity is because there's a risk involved. And that is very specific parts of the brain all talking to each other in a very efficient way that benefits us outside the market but works against us inside the market. So we have to let structure do its thing and keep our hands out of the mix until we're able to process all that stuff and understand why the amygdala has an emotional tag for a block of a certain color moving up or down on a screen across a line that is horizontal. Right? It's just a weird thing until you really step down and think about it. Like, why does this little machine that processes data that I call a brain, why does it behave that way? And more importantly, how does it impact my behavior? Because that's the goal, is to not disrupt it. It's not to fight with why you do the things you do. It's to understand them and embrace them and accept that you are human, and that the things you do are the net result of all the things that you are and have experienced, and not just beat yourself up, because that's where people stop. They start there, they stop there. They say, I'm a piece of crap. I'll never figure this out. It's dumb. I'm no good at this. And just a barrage of self-deprecation that doesn't help you at all. You can have every intention of the world on making your bed tomorrow morning, and if you don't make your bed tomorrow morning, it is not your fault in the sense that you're going to frame it that way. It is the end result of everything you're capable of being incapable of doing that one thing that you said you'd do. So it doesn't mean you can't hold yourself accountable, but don't beat yourself up, because that's honestly, it's just a waste of time. It gets in the way of all the stuff that actually matters. So that's not a free pass to go out and do stuff that you know you shouldn't do. You should always strive to be better. You could always strive to hold yourself accountable, but beating yourself up does not work. This is not a willpower thing. It's not a character flaw to not be able to do something that you want to do. It's not a character flaw to just not know the future. And that's where traders just stop trying to grow, because they just think that's it. Does that make sense? I do have to jump off here in about 10 seconds as well. I'm going to cut out 12:59. Do you guys have any questions for me before I jump off of here? I know it's been a lot of numbers and a lot of rambling, but I want to make sure that you guys all understand this stuff, because this is what is going to cause you to change your experience in the market, and you have control over that. Everything that you know, you perceive, you experience, all exists in your brain. So you have a lot of control over how you store, perceive, and retrieve that information. You just have to figure out how to do that, and that's what I'm here for. So I'm going to tell Snowflake, do not think about a red elephant. And what's going to happen? He's either going to do it or he's not going to do it. Right? I don't have control over that. He's got all the control there. Just shot a red elephant. Well, they're red when you shoot them, yeah. Snowflake, give me a number, 1 to 10. Actually, everybody in here, give me a number, 1 to 10. 6, all right. 69, it's a little out of the range, but I'll allow it. 7, all right. Now let me ask you a question. Why did you guys do that? Snapper, 7.5, boom. What made you do it? Because you forced us to? Because I asked nicely? Okay, that's where your thumb was. Okay. It's because your brain weighed a lot of information, external and internal. I asked you nicely. I challenged you. I said, hey, do this. And you agreed. Correct? You agreed to the point where you were willing to take an action. just like we do every other action we take. There was no stakes there. It was a very easy thing to do, right? Who won? Nobody won. Y'all won. You're not getting compensated for that. Sorry, bud. You get the service. It's a payment in lieu of service. Right? So really quickly, then I really got to go. Here's how it works, right? You've got a little highway in your brain. Okay? And there's 2 lanes in that highway. But functionally, it's a one-way highway. Okay. This is how our brain works. Concept. Okay. And then there is translation. And then there's perception. Or rendering. I'll call it render. Okay? Now, I gave you guys information. Okay? That's the render portion of this. Your eyeballs, your ears, your physical sensation, your smell, touch, all that. It all boiled down to you receiving information. In this case, it was audio form. And then it was taken down and translated into something that your brain could recognize. Right? I said, let's package this up. Let's send it to the appropriate room. And we're gonna treat that like something that we're gonna structure it in the form of words, and then the words have an idea behind them, right? So the translation part is where we apply structure to something, right? So this is the skin, this is the structure, this is the idea behind it. So once it's translated, it gets internalized and perceived by the actual inner part of the brain. Like it goes beyond language, right? It's a symbol now that we hold on to, that we understand as a concept. Right? Now, the other way, the return, the bounce back on that was that you weighed stuff internally in your brain, like, A, yes, I agree to do the number thing, and B, let's pick a number, right? So you kind of weighed that around in your brain, and then you chose a number, and then you decided to take that concept of agreement and a concept of a number, and you sent it right back up the chain. You said, all right, we're going to translate that into a yes and a number. Right? We're going to willingly provide a number, and then we're going to do this action to do so, right? And then the render portion was you just saying, type it in and hit enter, right? Very easy process. Now, because this was a bounce back, meaning it was a prompt and response, it was a very easy process for your brain. There was plenty of time in both directions, up and down, right? So if we think about it like a highway, okay, all the traffic went this way first, got what they needed, and then everybody went home along the same road. All right, Snowflake, take care. Yeah, I got to jump off too. I just want to explain this last part. So there's no gridlock. There's no car accidents here, right? It was just one simple task, one simple response, and it worked out nice. It was easy. Now, if you had a million things going on at the same time, right? If you had like a lot of distractions, a lot of stress, a lot of concepts down here that you're holding on to, or if you had a lot of these things that you're trying to perceive and render, and then the translation stuff is all gummed up because you got so much information flowing back and forth, you're going to have fires and car crashes and all that stuff because everyone is just trying to go wherever they think they need to go inside your brain, and it's overwhelming. And that's where impulse steps in. It's the off-ramp that gets us out of that situation. We don't want to blow up in a car jam. We want to take the off-ramp and take a detour, and then hopefully get back to wherever we were trying to go in the first place. And that's what impulse does in our brain. So if you've got too much, surface level information, meaning that physical perceptions, sensations, and things like that, that takes compute power, right? It requires us to dedicate resources to the translation process. And the translation process goes in both directions. And if we've got a lot of internal stuff, like concepts, like I'm really, really thinking about this and that and this and that, and I got this coming up and I'm super stressed out and I feel crappy about this, but I also feel really good about this. And then someone's trying to get me to do something, or let's say I'm sleep deprived and I can't render the concepts properly because my translation thingy is broken or impaired because I'm, super tired or drunk or something like that, the concept isn't going to make it out intact, right? So this is the underlying process that information takes in our brain. And when you want to do something really, really badly, that's one concept. The action of actually doing it and experiencing the end result is a different concept. But it has to go through this big chain, and you have to get that feedback that you did the thing before that part is resolved. Otherwise, these two live in conflict because it's unresolved. And you carry these around in your brain. They park right here on the highway. And then every time you try to use that highway, you got it sitting there. You got to drive around it. It's another dead car on the highway. Does that make sense to everybody? It's a very stressful process to not get resolution because we want closure as humans. And I think I kind of messed with you guys a little bit in Nashville too. We rapid fired some questions, for example, in the room to see the response, and I gave limited information to, like, Charlie, for example. Charlie got very stressed out trying to get information so she could accurately answer the questions, and I wasn't giving it to her. And that's because what I was trying to do is load up the information she was holding on to with the concept of her needing information because she was unable to push those things right back out without that information. So it's just a way to kind of overload somebody. And it's a really horrible thing, but it got a good result. And that's kind of what I was trying to demonstrate with low stakes. She was okay with it. So, all right, with that said, I do got to jump off here. I appreciate y'all hanging out, and we'll see you guys back if you're with us in Traders Paradise, we'll see you guys in about 20 minutes in the Calendar Press stream. Otherwise, if you're in Premium, we'll grab you over in the weekly wrap-up with the team. And I'll see you guys over there. Thank you very much. Have a good day.